Hi, this is Kerry Artek with Wicked Stocks, bringing you your daily Tesla report for Wednesday, July 8th, 2026. Before I forget, just want to mention that Wicked Stocks put out a stock pick on Tuesday, Shopify. If you're interested in that stock and taking a look at the setup for the buy signal, just go to wickedstocks.com and take advantage of our 2-week trial, and you'll be able to see it immediately. Also, with any pertinent stock picks that are still pending, and for the next couple of weeks, you'll get at least 4 more stock picks. So check us out at wickedstocks.com. Let's take a look at the charts. This is a weekly chart that goes back a few years, and these are our parameters longer term. 366.35 is a 1-year plus rising channel bottom that held nicely back in late March, early April. We almost tested it again a few weeks ago. We are in the midst of this convergence in a wedge formation, really, a descending channel top now at 438.11 all week long. We came very close to testing it. I call that an actual kind of an essential test within the 1% zone about 2 months ago, and almost last week we retested it. And so it is the 366.35 floor, 438.11 ceiling as we move through the month of July. If we close outside of this wedge, we've got a significant directional indicator in the respective direction. So if we were to close any week above 438.11 by a full 1% margin, that's the green line at 442.49, a Friday settlement there or higher would signal aggressive gains as we move through the rest of the year. The following 3 to 5 months, I would expect that 545.60 level, which is a 6-year long-term rising channel top that may well contain buying well into 27. Inversely, if we were to close below 366.35 by a full 1% margin, this week's magic number is 362.68. That would signal within a month or so, 3 to 5 weeks, 307.71, descending channel bottom. And yes, within 3 to 5 months of closing at or below 362.68, I would expect 226.88, this horizontal structure where we could bottom out through the rest of the year, possibly well into next. But we're neither one of those scenarios we're close to right now. Let's take a look at the daily chart. You've got that descending channel top on the weekly chart at 442.49. Sorry, wrong chart. And that is on the daily chart. I can show you here at 435.26. So we've got 35.26 to 38.11. I don't know if we'll see this area today. I kind of doubt it. But if so, can contain buying through the rest of July.
If you're finding value in this analysis, it's only a glimpse of what we offer. Your real trading edge starts at wickedstocks.com. Each week, premium members receive 2 high-probability stock picks. Each one comes with a complete trade plan, including exact entry, profit target, stop loss, and regular updates so you can manage the trade with confidence. You'll also get daily video analysis in the top traded markets, the SPY, the Triple Q, and NVIDIA, highlighting the key price levels, trends, and trade setups we're focused on. Whether you're day trading or swing trading, these insights help you zero in on the highest quality opportunities with clarity.
Start your 2-week free trial and trade with clarity from day one.
And once tested, we could fall back into the mid 360s within 2 to 3 weeks. I think with present volatility, we're now like into this 2 to 3 week swing trade scenario. When the volatility is a little bit more restrained, about a month and a half, 2 months ago, it was more of a 3 to 5 week swing trade. But here we are selling the mid to upper 430s, buying the mid 360s, this area narrowing week by week by week. For the day itself, I do have upside a 420 even as our upward pivot point. This is really the high that was put out on Monday. We came very close to retesting it on Tuesday. It is our upward pivot point for Wednesday. Pushing or opening above 420 does signal, I think, intraday, the 435.26 to 438.11 region, where once again we can top out through the rest of July and fall back into the mid 360s within 2 to 3 weeks. If we were this week to close above 438.11, I think any day this week, whether it's today or tomorrow, Thursday, then we have a 1 to 2 week rally into the 473.81 area. But I also want to remind you, as I said a moment ago, that if we close any Friday at or above the green line of 442.49, it's a longer term signal into the 540s by the end of the year. Downside, we've got still the high of the low at 387.80. It is a buyable support level, as 420 even is a sellable resistance. We could see 387.80 perhaps today, and if so, it can contain intraday, potentially daily selling pressures. Closing below 387.80, we should by Friday's close within 1 to to 2 days with present volatility fall into the mid 360s, where we could bottom out through July into August and round up again into the 430s. As I said, this is the wedge. And once again, I'll say it one more time, that if we do close below that 366.35 by a 1% margin, this week 362.68, expecting within 3 to 5 weeks 307.71, within 3 to 5 months 226.88. But until then, we're in this two-sided framework. This is kind of a 3 to 5 week swing trader's paradise. It's been playing out nicely now. At some point, things are going to give way in either direction, and we'll be there to monitor it and to give you that information. So I'm going to leave it at that for Wednesday's Daily Tesla Report, and you have a fabulous day.